In the hot seat this evening is Lara Warburton. She's Managing Director at Imara Asset Management. Lara, thank you very much for your time.
Pleasure, Bronwyn.
Let's look at asset allocation and, in your book, the key trends that are unfolding as we speak.
Bronwyn, I think, when it comes to investing, what we find is that a lot of South Africans are being encouraged to save. We know in this country we have one of the lowest savings rates in the world. And I think one of the concerns we've seen, especially with increased regulation happening on the financial advisory side, there's been a lot of talk about poor financial advice being given and now regulating that side of the business, which is all very good. But as a result, a lot of people are being encouraged to go into lower risk investments. And as a result of that, a lot of disappointment when poor returns are received from actually a savings vehicle. So I think the message I'd like to give is one of saying, if you can afford to take on a bit of extra risk, try and understand the various options that are available to you before you become disillusioned with a pure banking product and decide to stop saving, which I think might be happening to a lot of younger people.
Do you think that, Laura, do you think that that is because of the advice that's been given, or do you think it's because of a lack of education generally?
Primarily lack of education. I think partly advice that's been given, and I think that the focus on the advice might be also more on the people who should be giving the advice as opposed to the questions the investors should be asking. So I think that the education has to come from both sides. There needs to be a pull, a demand for education as well, and people need to be asking the right questions to make sure that they are being given the right advice.
So how would you, let's say that I'm a potential investor, I'm a young person, so I should be looking at investing in equities for the longer term. So how do you answer the question where somebody says, look at all the global volatility, look at all the global uncertainty, aren't equities a particularly risky environment, why should I go into equities now? How would you answer that person?
I think what people ignore in evaluating risk is time. And what we should start to do when we think about risk is think about time, because what time does is mitigate risk. So the longer time horizon you have, the more equity you should be looking at in a portfolio. And everyone can afford to have some equity exposure if they're looking 3 to 5 years or longer for their investment. But there must be a focus on having something in equities.
Well, let's focus now on South African equities and whether you perceive there to be value in the South African equity space and whether that can be sector specific.
I think that the local equity market has run up quite significantly, especially in the last 6 months. And as a result, we see a lot of nervousness from people not wanting to go in now because they believe if they'd gone in 6 months ago, they would have had 10% more of a return than if they go in now after a 10% rally. So I understand that conservatism. Being able to put money in on a monthly basis, you largely do away with that risk because you have the benefit of rand cost averaging and over time. So that's one way of saying don't worry too much about the timing. I think also depending on the time horizon, I've just mentioned 6 months and 10%, but if you look back to 2008, markets have only recently topped those levels. So if you do a longer term trend line, the returns from the local equity market have not actually been off trend. It's very dependent on the time frame that you look at. But over longer periods of time, you are going to find they will be the best performing asset class.
And so let's say this person, you say to the person, okay, put your money into equity markets month by month. Would you be advising them to pick particular sectors? What sort of instrument do you think they should use? What would be the best instrument from your perspective to use at the moment?
I come from an asset management background. My view is always to trust the professionals when it comes to making those asset allocations. There are some people who have an interest and an enthusiasm for the stock market, and if they feel comfortable making their own stock picks and they feel that they're getting the right information, I still think it's often a better alternative than some of the other options. But my advice to the man in the street would be pay the little bit extra that it costs for a professional team. Unit trusts would be my recommendation if you're looking for active management. And if you look across that sphere, there are almost 1,000 listed unit trusts in South Africa, ranging from money market funds with no risk to far more aggressive offshore funds, specialist funds. And then on the passive side, ETFs is another option.
Let's bring in a couple of the other asset classes here. So property, bonds, cash.
All available through unit trusts.
So you would definitely go the unit trust route?
I think I don't think that there's one size fits all for everyone, but for someone who's starting out in saving, it's going to give them the best diversification at the lowest cost.
And it does make sense, Kevin. I mean,
no, sure. No, I agree with that. I would give it to the professional.
Yes, I know. We give it to you, or we give it to you. Yes, we've got disclosure on the desk now.
Yes.
But in terms of active managers and performance, etc., if you go, and even the index tracking route, I mean, and you get exposure across the board, you're going to do relatively well.
Yeah, for my
over the long term.
100%. You know, for me, the key decision an investor has to make, particularly we're talking here about somebody starting out, so therefore fairly young, is to get your asset allocation right and not worry too much about which specific stocks or which specific sectors that you've got. So to have the right allocation to something like equities and to have the right mix. I just wanted to ask, Lara, if I can, where does offshore investing fit into your framework? What is your thinking on going offshore?
Our thinking is it's a good idea and diversification is important. But once again, I would say to people to understand the markets as a start out. Focus on the local market first and understand, because when you start going into offshore markets, you have to add in that layer of currency risk. And I think no one likes to get a statement in the post that shows them that they've lost a whole lot of money. When you see on the news that markets are up or down, you can understand why, but throwing in the currency layer can be an additional level. So offshore definitely has a place. At the moment, a lot of offshore equity is offering better value than local equity. It's definitely a good asset class to hold, but I don't think everyone should have everything.
What about in terms of looking at the market at the moment and this low yield sense that is coming through, that we're going to have to adjust our expectations to understand that the landscape has changed and it is now one where we are going to get low yields across the board. Do you think that investors are realistic about that, or do they think that everything's going to be hunky-dory?
I think it's unfortunate that fear and greed are typically the cycle that everyone follows when they invest. So at the moment, people are starting to feel fearful after 3 years of a really great rally since 2008. And that's the time that, you know, now they're thinking, well, for people who haven't got in, that maybe it's time to start dipping their toes, but there's that caution. We are in a lower yield environment. We have been for some time, but I think that avoiding getting involved is not the route to go, as I say, if you have that longer term time horizon. I think what's more concerning is that we're seeing inflation rising, and that's going to continue, especially with the oil price rising the way it is. So in a higher inflation environment, people do have to relook at risk and say, you know, how can I not afford to take on a little bit more given my longer term time horizon? But cash at the moment is a negative performer. You know, the people who are saving in cash are not going to be able to afford a retirement or a holiday.
Do you think people have too high an expectation of the type of return they can get out of equities?
I don't know if the expectation of return is too high, or if the nervousness about short-term losses. I think that's a bigger concern. For people who want to measure their wealth on a daily, weekly, monthly basis, that concern about short-term losses, I think, is going to push them in the wrong direction.
Just lastly, can I just quickly ask,
but I'm open to a disagreement.
You can disagree. You can disagree with Lara if you want.
Earlier on in the discussion, you were saying that people are encouraged to go, we are encouraged to save, in the sense of you have a lot of verbiage from government, a whole lot of stuff from various companies to say South Africa needs to save more. That's fair. Where we incentivize people, as you said, is more to save in cash-related type instruments. And we don't really provide enough incentive for people to go into equity-related. From your perspective, it's a hard question to answer. What could be done to encourage people to save in an appropriate way? In other words, by that I mean going into and having a good, solid allocation to the equity market.
I think I like to distinguish a little bit between saving and investing. Investing sort of implies looking bigger than just a bank account, and it also has more of a longer term focus to it. So for me, there's a distinction in terms of the commitment that the investor makes when they invest as opposed to when they save, where it sort of has a slightly shorter term connotation. I think education, as we've said, is probably the big issue. Our children at school are all learning life orientation. They're learning how to write out a check, balance a bank statement, and maybe a better understanding on asset classes and investments would be appropriate at school level. And I think, in fact, definitely would be appropriate. I think also the press is very quick to bad news sells. The press is very quick to tell you what's wrong with everything. And I think if people are just encouraged to ask, a few questions. Fees are important, absolutely, but you have to sometimes pay for what you're getting. So
that's
if it's value for money,
harder to justify though in a low yield environment.
Absolutely.
Because those fees are going to now be under scrutiny, because obviously there isn't that margin to.
And government has been trying to look at lower cost savings vehicles, which is where the RSA retail savings bond has come in on the banking side, but there hasn't really been a suitable equity match. And it is problematic because small accounts carry high costs. They are difficult to administer. But as I say, unit trust ETFs, they are all available, 5,000 Rand a month. It's a relatively low entry point.
Lara, thank you so much for your time.
Pleasure,
Lara
Bronwyn.
Warburton, Managing Director at Imara Asset Management.